The journey in relation to the regulation of foreign exchange in India had started way back in 1947 itself, when the Foreign Exchange Regulation Act was introduced. The act was later replaced by Foreign Exchange Regulation Act 1973, popularly known as FERA, which came into effect on 1st of January 1974. As most of us are aware, the process of economic liberalization began in India in the year 1991, which led to permissibility of foreign direct investment in diverse sectors of industry, commerce and businesses. Consequently, the foreign exchange reserves started to increase substantially. In that background, the Foreign Exchange Management Act 1999, commonly known as FEMA, was passed by the Parliament on 29th of December 1999, replacing the Foreign Exchange Regulation Act (FERA), an act to consolidate and amend the law relating to foreign exchange with the objective of facilitating external trade and payments and promoting the orderly development and maintenance of the foreign exchange market in India. FEMA came into effect on the 1st of June 2000.
As we Indians rejoice in our journey of 75 years of independence, Sansad TV contributes to the said phenomenal journey by dedicating a series titled 75 Years Laws That Shaped India, a special program discussing different laws that have been adopted during these golden 75 years. I'm your host Hemant Batra, back with another episode in that exclusive series. Today we are discussing the Foreign Exchange Management Act 1999, in short, FEMA. To talk on this groundbreaking legislation, we have with us a very learned expert panel. Joining us online, we have with us Justice Iqbal Ahmed Ansari, former Chief Justice of Patna High Court, and presently he is the chairperson of Punjab State Human Rights Commission. We also have amongst us in the studio Anuj Gogia, a senior bureaucrat who is currently Principal Additional Director General, Customs and CGST. Earlier, he has also been the Additional Director in the Enforcement Directorate and OSD in the capacity of Special Director as well in the Enforcement Directorate. So let us begin our discussion on this episode. Let me first come to you, Justice Ansari. In 1970s, we had this law labeled Foreign Exchange Regulation Act, which was replaced by FEMA, Foreign Exchange Management Act, which we are discussing today. There is a perception about FEMA. Rather, I would say there is dual perception about FEMA. One set of school of thought amplifies that it is a law still draconian, but less draconian than FERA. Whereas another school of thought is that it is a landmark law, a commendable law, which actually went to lubricate the process of economic liberalization, which was initiated in 1991. How would you like to describe this law?
As you say, FEMA, that means Foreign Exchange Management Act, which came to be introduced in 1999 and virtually in 2000. It was a step ahead of FERA. Under FERA, the law was very draconian in the sense that nothing was possible to be done by a person unless he is permitted to do so.
Right.
And secondly, if there was any action taken by a person which constituted any breach or contravention of FERA, it was a punishable act. It was an offense. So far as FEMA is concerned, it has liberalized in the sense that the scheme of the act makes it possible for the central government and also for the Reserve Bank of India to act on its own in relation to the foreign exchange policy. and it does away with the criminal action, and whatever action is required to be taken is civil in nature, including the punishment. It's a civil imprisonment as described in the Act. So that way, to my mind, the law is not so draconian as it's supposed to be. It's a step far ahead of FERA. FERA was a draconian law, but not FEMA.
Right.
FEMA has regulatory measure, which is obviously required to be taken by every government, and so has been done by the government of India.
Right. Mr. Gogia, what is your take on FEMA as to its meaningfulness, as to its usefulness? And because, I went through its objective. Its objective is very briefly worded. So, it doesn't come across sort of overwhelmingly as to what its objective is. So can you please explain to us?
In fact, I will continue from where Justice Ansari was talking of the common theme in FEMA as opposed to FERA was that FERA was a criminal law and FEMA was a civil law. अगर हम background देखें, FERA came in 1973, and if you remember, those were the days of the oil shock. When the Arab oil exporting countries, they imposed embargo on export of oil, the price of oil shot up. So what we call the oil shock, to cater to that, we needed a legislation, we were short on foreign exchange. तो उस समय फॉरेन एक्सचेंज रेगुलेशन एक्ट जो आया, उस समय के हिसाब से आया जो उस समय की ज़रूरत थी.
बिल्कुल बिल्कुल.
एक उस समय एक कानून और था जो विच इज स्टिल देयर ऑन आवर स्टैट्यूट बुक्स, दैट वाज द COFEPOSA, कंजर्वेशन ऑफ फॉरेन एक्सचेंज एंड प्रिवेंशन ऑफ स्मगलिंग एक्टिविटीज़ एक्ट 1974, जिसमें अगर आप फेरा में कुछ आपने अगर ऑफेंस किया तो यू कुड बी सब्जेक्टेड टू, अपार्ट फ्रॉम द प्यूनिटिव डिटेंशन अंडर फेरा, देयर कुड बी preventive detention under COFEPOSA.
COFEPOSA also.
And that is one of the rare provisions which has continued even under FEMA. So, in fact, if we look at the objects of the Act, the objects of the Foreign Exchange Regulation Act, they speak of regulation, they speak of prevention. But the object of the Foreign Exchange Management Act speaks of promotion, facilitation. So that showed the change in the attitude, that the idea is that foreign investment is coming in industry, and that is something which is very different from the environment of 1973. So for that we need a new legislation which can cater to the requirements of the 21st century, so as to say. So one of the themes, of course, was that FERA was criminal in nature and FEMA was civil in nature. The second theme, if you see in the Act, is unlike FERA, FEMA distinguished on the nature of transaction, whether it is a current account transaction, whether it is a capital account transaction. Secondly, FERA went by residential status. Is it a person resident in India or, FEMA went by the residential status, whether the person is resident in India or resident outside India, regardless of his citizenship. And thirdly, if you look at the Act is very brief and very small. Most of the provisions are contained in the regulations which are issued by RBI as the chief custodian of the foreign exchange of the country and by the central government under delegated legislation. उसके अलावा अगर आप देखें सेक्शन 37, the powers of officers of enforcement directorate in investigation are those powers, like powers as are available to income tax officers when investigating a case under the Income Tax Act. तो ये एक नई चीज़ थी कि आपने उस एक्ट में, इवन दो दिस इज अ सेल्फ कंटेन्ड कोड, आपने उस एक्ट में पावर्स नहीं डाली, आपने वो पावर्स दूसरे एक्ट से उठाई, एंड यू मेड इट the act so simple and flexible.
Right.
So that is something unique for those days.
Definitely it is a unique law, a landmark law. That is why we are discussing this law today. Justice Ansari, coming back to you, I would like to ask you also now about the specific provisions of this act. Let us start with the one of the key provisions about authorized dealers. बहुत लोग पूछते हैं कि what is this concept and scheme of authorized dealers? Because as I remember, under FERA, it had a very narrower import, whereas now under FEMA, authorized dealers hold a key position, to say so. So, what is this concept of authorized dealers? What is their role under FEMA?
Actually, as far as the RBI is concerned or the central government, they cannot do everything. And naturally, therefore, they need a person who is authorized to deal with foreign exchange regulation in terms of the policy which has been made. And that is why we see ordinarily foreign exchange accounts be dealt with. There, if I have to get money or send money outside, even for the education of my children, I will obviously need it to be regulated, and that regulation will be the regulation which the RBI and the central government make. So in terms of that, the authorized persons are the real persons who are authorized to give the permission which otherwise the central government or the Reserve Bank of India would have been required to give. So the banks are the authorized person. Other agents are also their private persons who are authorized to deal with such activities.
Right.
That's how it is.
Yeah. Basically, they are exercising delegated authority. Well, India has come a long way since the onset of economic reforms in 1991. In 3 decades of economic reforms, the level of foreign exchange reserves has steadily increased from US $5.8 billion as of end March 1991 to US $640.4 billion as of end November 2021. India currently has the 4th largest foreign exchange reserves in the world. I'm sure that FEMA contributed constructively in raising the bar of our forex reserves. Let us now glance through the parliamentary journey of this act.
The Foreign Exchange Management Bill 1998 was introduced by the then Finance Minister Shri Yashwant Sinha on August 4, 1998. The 11th report on the Foreign Exchange Management Bill was submitted on 23rd of December 1998 in Lok Sabha. The Foreign Exchange Management Bill 1999 was introduced on October 29, 1999. It was passed in Lok Sabha on December 2, 1999 and passed in Rajya Sabha on December 8, 1999 without any amendment. The said bill received the assent of the President of India on 29 December 1999. However, the Foreign Exchange Management Act 1999 came into effect on the 1st of June year 2000 after its notification in the Gazette of India.
Let us move forward with our discussion. Mr. Gogia, let me come to you as we are discussing key provisions of the statute. And you had touched upon this current account transactions and the capital account transactions. I'm sure many of our viewers would be interested in knowing about that particular regime and also about holding foreign securities and immovable property outside India. Can you please tell our viewers about that?
As I mentioned, FEMA had a common theme that what is the nature of the transaction. As we were hearing about the evolution of our foreign exchange reserves over the years, since we were quite comfortable on the current account position, FEMA follows a theme that unless the current account transaction is prohibited, it is deemed to be generally permissible. अगर हम section 5 की language पढ़ें, which gives a general permission for current account transactions. And what is a current account transaction? Current account transaction is normally anything, let us say in the normal course of business or in the normal course of the expenditure and something which is not a capital account transaction. So, for example, import and export of goods, import and export of services, a person traveling abroad, person spending for education, person spending money for medical care, interest, even on a loan is a capital account transaction, but interest is a current account transaction.
ठीक है.
So, current account transactions are generally permissible unless specifically prohibited. So, in this regard, the central government has issued the current account transaction rules. Usme there are certain transactions which are prohibited. So, for example, you cannot buy a lottery ticket.
Right.
You cannot indulge in gambling. There are certain transactions which require the permission of central government and which require the approval of RBI. So, for example, remittance of more than $1 million for consultancy, that requires the approval of RBI.
But it is not automatic, but it is not barred also. It needs permission.
It needs permission. But the general theme is everything else is automatic permission. So, if you are sending money abroad for imports, if you are swiping, you would remember initial days when you used to have a credit card, it used to be valid only in India and Nepal. Now you have a card
Nepal
which is
and
valid
Bhutan, something like
globally.
that it used to say.
Now a credit card is valid globally. You can use it on any international website. So that is a current account transaction where normally there is no restriction.
Right.
In capital account, general principle is that only transactions which are permissible specifically or generally are allowed, the other transactions are not allowed.
I see.
So, Section 6, in fact, earlier all the powers in this regard were with RBI. Now, part of the powers are with RBI as far as debt instruments go. For non-debt, which is equity, foreign debt, foreign direct investment, जिसको कहते हैं FDI, for that the powers are with the central government. There also the theme is automatic. So, in ODI, for example, overseas direct investment, there is no requirement for permission if it falls within that framework.
Framework of automatic.
Similarly, for FDI, within that automatic framework and the sectoral cap, depending on the type of industry, no permission is required, only information or intimation is required to be filed with RBI. So, it is based on reporting.
अब जैसे जस्टिस अंसारी बोल रहे थे कि ये अब क्रिमिनलिटी इसकी रिमूव हो गई है जो फेरा में होती थी, तो ये कॉन्ट्रावेंशन और पेनल्टीज मिस्टर गोगिया जो हैं इस एक्ट के अंडर, फेमा के अंडर, क्या अब ये क्रिमिनल नहीं रही हैं और आर दे कंपाउंडेबल, बिकॉज अर्लियर दे वर नॉट compoundable?
The general principle is that the criminality is not there and these are civil penalties. अगर आप सेक्शन 13 देखें तो दी पेनल्टी विच कैन बी इम्पोज्ड इज अप टू 3 times दी अमाउंट इन्वॉल्व. तो अगर आपने
फिस्कल
जनरली दैट इज दी कंसेप्ट, मगर पिछले 2019 में कुछ बदलाव आए कानून में जो हमारी एक देश की प्रॉब्लम थी ब्लैक मनी अब्रॉड, तो उसके लिए एक नया प्रोविजन आया है सेक्शन 37A. सेक्शन 37A में इफ एन इंडियन रेजिडेंट हैज फॉरेन एक्सचेंज, foreign currency or a immovable property situated outside India which is held in contravention of section 4, तो उसमें एनफोर्समेंट डायरेक्टरेट के ऑफिसर्स उसकी इक्विवेलेंट प्रॉपर्टी इंडिया में अटैच कर सकते हैं और उसमें क्रिमिनल प्रोसिक्यूशन भी अब इंट्रोड्यूस कर दिया गया है. आई एम नॉट अवेयर इफ एनी सच केस हैज रीच्ड फाइनलिटी, बट द प्रोविजन हैज,
पर ये ट्रायल स्टेज पे है या
जी, बट दैट इज बिकॉज ऑफ द यूनिक सिचुएशन एंड देयर आल्सो देयर इज अ मॉनेटरी थ्रेशोल्ड कि जो पैसा इसमें है कम से कम 1 करोड़ होना चाहिए, अदरवाइज ये पावर नहीं इन्वोक हो सकती. तो सेक्शन 13 1A 1B 1C इसके हिसाब से डाले गए हैं. But otherwise, generally, the idea is that the offence is civil in nature. और जहाँ तक आपने compounding की बात की, Section 15 is a very liberal provision for alternate dispute resolution mechanism, where RBI has the power to compound any offence other than Hawala under Section 3A, and Enforcement Directorate has the power to compound an offence under Section 3A. उसमें अगर कंपाउंडिंग फी जमा हो जाए तो देन दी ऑल प्रोसीडिंग्स अंडर द एक्ट दे अबेट.
Well, it is time to slip into a very short break. Please don't go anywhere as we will be back soon. Welcome back after the break. You're watching our special show on selective landmark laws legislated during our journey of 75 years of independence. Today we are discussing a significant law, the Foreign Exchange Management Act 1999, or in other words, FEMA. Let's continue with our discussion. This is basically last leg of our discussion. Let me come to you, Justice Ansari. Justice Ansari, there is this section in FEMA, Section 39, which has been bothering me, and I'm sure many law practitioners and law students as well, because Section 39 presumes evidence against an accused. I won't say it presumes an accused as guilty, but it definitely presumes as evidence produced by the prosecution to be authentic. Do you in any which way think that it has a fabric of being contrary to the principles of natural justice, or contrary to some of the fundamental rights, like right of equality before law?
See, as we all know that we are governed by Anglo-Saxon law. In the Anglo-Saxon law, the presumption is that a person proceeded against or an accused is innocent until the time he is proved guilty. Mm-hmm. But under the French law, the person is presumed to be guilty until the time he is proved innocent.
Right.
Now, in the same manner, in particular case, the documents which are relied upon by the authorities in the case against a person who is supposed to have violated the foreign exchange guidelines or rules, regulations, whatever is stated there, they will be presumed to be true until the time it is proved to be false. So that is an addition, but this reverse burden is not peculiar to FEMA. It is for other acts as well. There are many acts, like you have the
even Prevention of Corruption Act,
and Psychotropic Substances Act, Essential Commodities Act,
right.
Many acts where this kind of reverse burden, it is called, that reverse burden is placed. And this absolves the government of responsibility of proving the facts which are stated in a document. But nonetheless, there are many judgments which say that the primary responsibility of proving is still on the government. And that way, if it is looked at, the ultimate conclusion will be that a document, when produced, will be presumed to be true, the contents of the document particularly, and it will be for the accused or the person proceeded against to reverse that burden. That's right. How it is. Right. So there is no doubt about it that some inconvenience is faced by the person, but the foreign exchange is such a thing that some levy is required to be given to the government for the purpose of ensuring that no breach or violation of the foreign exchange policy takes place.
Yeah, sorry to interject you, Justice Ansari, but this law, what we're discussing today, was passed in 1999, so it's more than 2 decades old. Do you think any changes or amendments are required in this law in the current times?
Changes, this appears to be half-hearted in the sense that you are only giving the contents of the document as presumed to be true. But as far as the oral evidence is concerned, there is nothing. So that perhaps is something which Government of India has to think of. Though in case of foreign exchange, it is always documentary, but many a times those documents are not sufficient. You have to adduce oral evidence. On oral evidence with regard to that, there is nothing under the act, whether they will also be presumed to be true or they will be presumed to be neutral until the time they are proved true.
Right. Right.
That is the deficiency which the government of India perhaps needs to look at and accordingly amend.
Right. Well, it's time to take the viewer's question. This time the question has come. Let's see who has asked the question this time around and what the question is. Well, the question has come from, as I can see, Rima from Alwa. Let's listen in.
I would like to ask, can there be an appeal against the order of the Compounding Authority under Foreign Exchange Management Act?
Mr. Gogia, would you like to take this question?
The short reply is that no, there can be no appeal.
No appeal against...
There can be no appeal against the order of the Compounding Authority. The basic underlying idea of compounding is that we want a faster resolution to
Absolutely.
the offence. So the order has to be certain. If we are giving a right of appeal to an order against the Compounding Authority, then there is no difference between a normal education and compounding.
But it's a voluntary...
So Section 15 in fact is
admission.
quite, it gives quite substantial powers. Any offence except the offence under Section 3A can be compounded by RBI, and the idea is that RBI, as I mentioned, is the chief custodian of the foreign exchange reserves of the country.
Absolutely.
And Section 3A, which we colloquially know as Hawala, the enforcement directorate has the power to compound the offence.
Yes.
So if the offence is compounded, it is as if that the
offence never took place.
The offence, if the offence is compounded, then any proceedings under the Act cannot be initiated, or if they are already underway, then they cannot be continued. The only restriction which has been imposed now is that the money involved must not be part of a money laundering investigation or a terrorist financing investigation.
So that is the exception.
That is the exception.
Absolutely. Well, thank you so much, Justice Iqbal Ahmed Ansari and Anuj Gogia, for sharing your expert views and enlightening us meaningfully about the statute. That's all we have in this edition of the program. You can send your feedback at sansad.tv@sansad.nic.in. You can also download our mobile app, Sansad TV. And you can also connect with us on various other social media platforms. Thank you for watching. Goodbye and good luck.